Thinking about starting a contracting business but not sure which business structure is best? Choosing the right business structure is one of the most important decisions you'll make when setting up your construction or contracting company. It affects your taxes, personal liability, and even your ability to grow your business. So, in this video, we're going to break down the most common business structures, explain their pros and cons, and help you decide which one is right for your contracting business. So, let's dive in. Before we get into the specific types, let's quickly cover why choosing the right business structure is so important. Liability protection. Some structures protect your personal assets while others don't. Tax implications. Different structures have different tax benefits and obligations. Ease of setup and maintenance. Some require minimal paperwork while others have strict reporting requirements. And growth potential. If you plan to bring in partners, investors, or expand your structure, needs to support that. So let's go over the four most common business structures for contractors. First one is sole proprietorship, which is the easiest to set up. It's best for solo contractors just starting out with very low risk. A sole proprietorship is the simplest and most affordable way to start your business. Here are the pros. It's easy to set up. You just start working. There's no separate tax return. With profit and losses go on your personal tax return, and you have full control. You can make all the decision. Here are the cons. There's unlimited personal liability. You're personally responsible for debts and lawsuits. It's harder to get financing. Banks may see you as a higher risk and no business tax benefits. You may pay higher self-employment taxes. If you're starting as a sole proprietor, considering getting a DBA, which is a doing business as name, so you can operate under a business name rather than your personal name. Limited liability company, the best of both worlds. This is best for contractors who want liability protection but simple management. An LLC is one of the most popular structures for contractors because it provides legal separation between you and your business while keeping taxes flexible. Here are some pros. Personal asset protection. Your personal savings, home, and assets are protected from business debts in most cases. Flexible taxes. You can choose to be taxed as a sole proprietor, partnership, or even an S corp. And it's easier to get financing. Banks and suppliers prefer LLCs over sole proprietors. Here are some cons. Some states require annual fees or extra paperwork. You still need good contracts and insurance. An LLC doesn't protect you from negligence claims. If you work with subcontractors, consider an LLC to protect yourself from liability if something goes wrong on a project. S corporation or an S corp, tax savings for growing businesses. This is best for contractors making over $50,000 a year who want to save on self-employment taxes. An S corp is a business structure that allows owners to save money on self-employment taxes by taking a portion of their income as a salary and the rest as distributions. Here are the pros. Lower taxes. You only pay self-employment tax on your salary, not on distributions. Asset protection. Your personal assets are protected from business liabilities in most cases. Credibility and financing. Lenders and clients see an S corp as more legitimate than a sole proprietor. Here are the cons. More paperwork. You have to file a corporate tax return. Salary requirements. The IRS requires you to pay yourself a reasonable salary before taking distributions. And it's not ideal for small, low-income businesses due to payroll and bookkeeping requirements. If your contracting business is growing and bringing in solid revenue, switching from an LLC to an S corp can save you thousands in self-employment taxes each year. C corporation, big business structure. It's best for contractors planning for major growth, investors, or employees. A C corp is a separate legal entity that allows for unlimited growth through stock sales and attracts larger investors. Here are the pros. Limited liability. The business is fully separate from you personally. Lower tax rates on retained earnings. You can reinvest profits at lower corporate tax rates. And it's great for expansion. If you plan to bring on partners, investors, or go public, a C corp is the way to go. Here are the cons. Double taxation. Business profits are taxed at the corporate level, and then again when you get paid to owners as dividends. It's complex to set up. More legal and accounting work is required. Most small contractors don't need a C corp unless they plan to bring in large investors or expand nationally. So here's a quick table on the pros and cons of each and which one is best for. As we said, a sole proprietor is best for new contractors, low risk work, LLC, small to mid-sized contractors, S corp, growing businesses or tax savings, and C corp for large scale companies and investors. And as a reminder, we aren't attorneys, so we advise you to get help when you're setting up your business structure and making those decisions. At One Exam Prep, we help contractors not just only passing their licensing exams, but setting up their businesses If you need help registering your business, we offer business setup assistance, including LLC formation. So click on the link below to get started. And don't forget to like this video and subscribe and hit the bell notification so you never miss an update on licensing, business growth, and contractor success. And we'll see you in the next video. And make sure to check out oneexamprep.com for all the expert guidance on licensing tips and contractor prep.